Hey everyone, welcome back to the Market Interest, where we talk stocks, finance, and the markets. Facebook just took a dive. It tumbled over 26% today, wiping out all the gains that it had this past year. And honestly, if you bought the stock a year ago, you would actually be down about 11%. So you would have wasted, all that time value with your cash in a stock that didn't produce anything for you. It's not like it's paying a dividend. It's not like it's giving you back any bit of premium over the years. So I know a lot of you are probably thinking, why did this even happen? And should I buy at the dip? Should I hold my stock, or should I sell this position right now? And just have a lot of nerves or angst about it. And so what I wanted to do is, go over what my good friend Kevin O'Leary has been saying about the stock, what his opinion is about this, and go over some of the rationale that I have as well with the stock. But I think there's some opportunities here that could be good for certain investors. If you're thinking more longer term, you're okay riding some of the waves. I don't think this is the bottom of where they are right now, but I think we're closer to it, pretty darn close to it. Let's start this off by taking a peek at the company's price to earnings ratio over time, along with a couple of the other FANG stocks. We have Facebook, Google, Amazon, and Netflix in here. See up at the top here what their price to earnings ratio was at that point in time. Back in 2020, September 2020, you're seeing Amazon price to earnings is 120, which is wild. Netflix over 85, Google at 33, and Facebook at 33. So those two have the lowest multiples. As time goes on, we see that everything's starting to trickle down a little bit more. If we take a peek in the past 6 months, you see that all these stocks have their price to earnings multiples have started to drop down a lot, especially with Facebook in this past day. But Facebook's is looking pretty attractive right here at 17. And the reason why I say that is because, and I mentioned it before in the past, is the PE ratio, the forward PE is typically around 16 to 17. Typically around 16 to 17. That's a 25-year average according to JP Morgan's Guide to the Markets. And really, multiples have been through the roof with so many of these companies. Facebook is finally getting to a point where they're actually meeting that average. They're 17.25. So they're really close to being at a 25-year average, which I find attractive. I bought a little bit more Facebook today. I'm not rushing to buy any more of these tech stocks as their PEs are dropping, because they aren't even getting close to the averages. Now, do I think Facebook hit the bottom? No, I don't, but I think they might be really close to it. And, if I'm wrong, I don't care, because I'm a long-term investor with Facebook. I don't care if they go up and down a little bit, 10, 20%. That's what they do. They have a higher beta, higher volatility. It's to be expected. And this happens with Facebook every handful of years anyways. We see them take some really big dips over time. They don't recover right away always, but it might take them a little while. But I'm a longer-term investor. I think the company's going to be here for a while. I mean, look at they control the metaverse. They control the metaverse. All right. And I mean, let's take a peek. Let's take a peek here. Their revenue is last year they had 118 billion. It looks like in revenue. They're producing $34 billion in revenue a quarter. A company like that isn't going to go out of business like anytime soon. It's not going to happen overnight. There might be some movements within their stock and how they're working, but I don't think that type of company would go out of business overnight. Now, have companies like that gone under quickly? Yes. Do I think Facebook's one of them? No, I really don't. Their gross margins here, look at 80% on their gross margins, net margins 31. I mean, they're a profitable company. They're doing well. They have to figure out a few things. Clearly, they have to figure out a few things. Otherwise, they're not going to be as profitable. They're going to do, a lot worse. So they have to figure out a few things. I'll definitely say that. But I don't think that they're going to go away anytime soon. Now, if we take a look at the PE multiple again, all right, let me just add a couple comparisons in here. We'll throw in NVIDIA. Let's just take a peek. Let's just see how that looks with NVIDIA, right? NVIDIA's price to earnings, almost 74. Like that's a lot, guys. That's a lot. You know, let's add Tesla in here because we all know that they're insane. But full disclosure, I own Tesla, a lot of Tesla. I own a lot of NVIDIA as well. Here, let me get my big head out of the way. All right, so yeah, their P's obviously going down as well. Tesla's price to earnings is 182, so it's ridiculous. It's a ridiculous multiple, ridiculous. I own a lot of them though, so I'm long. Go Elon. All right, let's take a peek at a couple other measures here. All right, we're looking at the return on total capital for Facebook, Google, Amazon, and Netflix. You'll see the total numbers up at the top here. But as you can see, Facebook has the best return on total capital. So that means a lot to me. If their price to earnings is dropping, they're also making the highest return. That's what you're looking for, guys. Like that's what we're all looking for as investors, as long-term investors. I'm not trading this company. I'm not like trying to day trade this and go for swings here. I'm looking for a company that has good financials and something I can invest in for a while. I think these look fairly good, and like they're not even close to the other competitors. They're not even close. So that's attractive. Now let me pull in a couple of the other companies like NVIDIA. Give them a fair shot here. Let's pull in Tesla. All right, and even still, NVIDIA is doing great as well. Like they're in second place right now. We'll see how their earnings pop up, but they're working strong. They're doing well. I expect that they're going to continue doing well. Obviously, with this huge chip shortage and everybody, it's in full demand right now. But Facebook is still on top. Facebook is still on top of all those companies. Now, side note here, if we take a look at Tesla, look at the trajectory of their return on total capital. I mean, that's exciting. That's exciting. Their PE might be out of whack, but look how much they're making moves here. They're producing. So I don't want to go on this little side tangent because it's about it's really about Facebook today, but. But yeah, Facebook, I mean, they're making return on their capital. They're making return on their total capital. That's important. They're generating a ton of revenue, a ton of cash. So, I'm long Facebook. It's got to be right. It's got to be for the right type of investor. It's not going to be for everybody, but for somebody who is looking for a longer term investment, is looking for, growth, that's okay with the volatility, this could be an appropriate company for them. So with that, let's head over to my good friend, Kevin O'Leary.
Different this time around. This is the third time the company's missed its quarter in almost a decade of being public. It was punished brutally on the other previous two times. Let me talk about this stock for a moment in the context of what is occurring over the next three trading sessions. Number one is that this company is indexed. So the majority of the owners are institutions, pensions, very large countries. It gets a weighting previous to this downdraft, if you want to call it that, of 5 to 6% in the majority of sovereign indices. Who owns Facebook? Sovereign funds, pension plans, universities, all that. Retail investors have some of it, but it's not material.
And that right there is probably the biggest point, guys, is, all the pension funds, retail investors, we may own it, we may have a lot of it, and obviously it means a lot to us, but the amount of cash and capital that's put into these companies, a lot of it's coming from institutional investors, whether it's, mutual funds, index funds, pension companies. Massive amounts of capital are coming from those companies. And it doesn't sound like they're pulling out capital. Sounds, as he mentions later on in this interview, that they're going to be putting more in, or rebalancing their portfolios to make sure it makes sense, averaging down in terms of their price. So all in all, I think, Facebook still is a good company. Facebook has over 3 billion users. That's really powerful. That's really powerful. and they've got a lot of influence. They're tied into Instagram. They've got the metaverse. They've got a lot of things going for them. So I don't think this is the type of company to be worried about, to sell off on. I also wouldn't be, if you're trying to trade it, I wouldn't rush into buying right now. But if you're a longer term investor, I find no problem, starting to work your way into this position. I started to today as well. So I think it's a good company to be with for a longer term. Meaning like at least another 2 years, 3 years to see how it all pans out. Now, I'd be a little cautious about some of these other tech companies that are coming out as well. I don't think that their multiples are going to be as attractive as Facebook. So just make sure that you guys are investing wisely. Talk to a financial advisor beforehand, to work with somebody. If you want any advice, feel free to reach out to me, and we can always set up a consultation. But with that, I think the markets are moving around, and it's for a reason. They're trying to recalibrate, get into a position where things actually make sense. Things have been flying way too high for way too long, and we're starting to land down on some steadier ground. All right, so yeah, let me know if you guys have any questions, comments. Feel free to join us on Facebook. Go to the Market Interest on Facebook to join the discussion there. Unfortunately, we can't do comments on YouTube, but we can over on Facebook. So join us over there. All right, look forward to seeing you guys soon.